In this lesson, we are going to talk about some of the key concepts in Forex trading that you need to understand, which are basically the foundation of every single profitable trading strategy out there. And that will be support and resistance levels, support and resistance zones, as well as the demand and supply zones. So let's get straight into it. So starting off with support and resistance. Some traders prefer to use candles for reference, but experience has shown us that lows and highs of candles are better indicators of where to place those support and resistance levels. A candle's close is important when defining the support and resistance zones. The higher the time frame, the more accurate the support and resistance lines will be. So it is important to understand that a support or resistance level that has been drawn on H4 is more important than a support and resistance level drawn in 1 minute chart time frame, right? So it's very crucial that you understand that. Now, looking more in depth on support, basically support is the level at which demand is strong enough to keep the price from growing lower. As the price goes lower, it becomes cheaper for us to buy it. By the time that the price is at the support level, demand will overcome the supply, and when this happens, the price will bounce up and continue to go up. So it will continue to go higher. As you can see, the illustration that is being displayed on your screen, this is basically what we call support. So as you can see, we have 3 touches there on the support line, and on the 3rd touch, you can see a nice move, a nice bounce of the support level that basically changed the downtrend into an uptrend. There will be times when the price doesn't hold and the setup basically just fails. This is an indication that the previous levels were not strong enough to hold the price there. It also simply means that sellers have outnumbered the buyers. Take your loss and wait for another setup, right? Don't take it too personal. Remember what we talked about in the previous lessons. It's not about us leading the market, but following what the market is showing us that it is about to do. So it is best to just take your loss and wait for another setup. And this is something that you should take note of, especially when you're trading Nasdaq. After a drop, there will always be a pullback for buying opportunities or a retracement if there's no negative fundamentals. You will always get your buy with the right timing and patience, of course. You basically can see all this in our past results. Now, we're not saying Nasdaq buys all the time, but we buy most of the time, as we are now familiar how the most influential stocks under Nasdaq 100 moves over the long term. Now let's talk about resistance, which is the opposite of support. It is a level at which buyers hesitate to continue buying because it's already expensive. It's too expensive to jump into the market. Remember, we need to buy low, sell high. As more buyers hold back, sellers come into play and push the price lower. As you can see with the illustration that is on your screen right now, this is basically what we mean by resistance. So basically is where the point where sellers are hopping in and basically pushing the market down. So we can safely say it's a zone where supply is basically increasing. Now, just like support, resistance doesn't always hold. Market participants may be willing to pay even more for the stocks or whatever that market may be, and this can lead to price pushing higher until a new equilibrium has been found. Traders typically use different levels of support and resistance. These are established by connecting the highs and the lows of previous sessions or over multiple past trading sessions. To be more accurate, it's a good idea to find every candle's high or low rather than its closing value. Okay, now that we have talked about the support and resistance levels, let's talk about the support and resistance zones. Okay, there's a difference between the levels and the zones. Technical analysis is not science, all right? And it becomes more clearer when examining support and resistance zones. Zones are like support and resistance lines, and the lines are basically referring to the levels, but they cover a larger area on the chart. Now, this area contains the exchange of contracts, stop and limit orders, as well as orders waiting to be filled, are all stacked at these zones. So you just need to understand that zones cover larger areas than the levels. Now let's move on to supply and demand. This subject gained a lot of popularity recently. Supply and demand zones offer insights into the structure of the market. They are like support and resistance zones, but there are certain rules that make them stand out more than just being support and resistance levels. So as you can see on your screen, we basically have the supply zone. As you can see, this is how a support zone looks like, and then here we have our demand zone. So as you can see, it's just the opposite of a supply zone, right? So a demand zone is where we're buying at, and then supply zone is where we're selling from. So supply levels are broader than resistance line, and they are very similar to resistance zones. This could be defined as resistance level where traders are selling a lot of contracts. So that's it for phase 1. In the next lessons, we are starting off with our phase 2 as we go deeper into the big boss course. Hope you've understood everything. in this phase 1, and which is the foundation of this course. So it is advisable that if you missed on any concept, that you go back and just go through those videos once more, so that you get to understand every single aspect as we go deeper into the course. Let's get started with the second phase.